Hey everyone, Chris Lopez here, and today is another episode in a series where we interview one of the contributors to the 2020 Guide to Denver Real Estate Investing Strategies. And my guest co-host today is my good buddy, Joe Massey. Joe, how's it going?
Fantastic, man. Just excited to be here. One of our favorite clients here in the studio with us. Going to be a lot of fun today. Again, talking about the 2020 Denver Guide to House Hacking, Real Estate Investing, whatever your chosen method of investing in real estate is. Have a terrific guest in the studio today, Mr. Ben Einsphar. Could not be joined by his wife today, Allison, but I know she's out there listening. So, Allison,
Yes.
hope you're going to enjoy the show. But, Ben, thanks so much for joining us, man. I'm really excited to have you on here.
I'm excited to be here. Thanks, Joe. Thanks for the excellent introduction.
Yeah, and so,
Awesome.
You were actually just on a podcast, I think it released like 2 weeks ago, Ben, where we interviewed you and Allison just about the house hack you guys bought in Arvada about just over a year ago, actually, now that you guys were operating as an Airbnb. So we'll talk about it a little bit, but I just want to mention out there for anyone that's looking to house hack, especially if you are a guy out there with a wife or a girlfriend or fiance, definitely listen to that podcast and have your significant other listen to that one as well.
Absolutely.
Because Ben and Allison did a great job. So Ben, what we're going to talk about today is your investing strategy a little bit and also how you're doing in the current COVID-19 pandemic stuff. So why don't you rewind a little bit and just give them the quick history about, because I know you already owned, I think it was 2 rental properties before you moved to Denver here
Yes.
2.5 years ago.
Correct.
But give people the quick history that got you into real estate investing and why you're in Denver.
So it started back in late 2016, road trip, going to see a hockey game with a buddy. And on the way back, just talking about investing, stocks, bonds, just typical investing. Then real estate got brought up. And he was like, Ben, you should listen to the Bigger Pockets podcast. And I started listening to it to and from my way home from work. I had an unfortunate long commute early in the morning, and I was hooked. I think anyone out there that can really relate to just diving into the podcast early on, really young, single at the time, wanting to make the big bucks.
Yeah,
it's attractive at the time.
Yeah,
and that's how it got started.
Okay, and then I know when you guys moved out to Denver, I think it was 2018 you guys moved out here, or was it 2017?
Late 2017.
Okay. So late 2017, and you were with Allison at this time already, right? You guys moved out together?
Yep.
So just give people the context here again, because you guys have such a great story, and I want more couples to hear it.
Thank you.
Just like how you got, bitten by the real estate bug, and I know you kind of dragged Allison along, and now Allison is, I'd say, a partner with you in this, and she's jazzed about it as well.
Yeah, she loves it. So I always knew I wanted to get into real estate, and I kind of fell into the accidental landlord term where I bought what I thought in Nebraska would be my long-term build a family in, and then I got a call to Denver working a promotion internally through my company. And we moved out here, and then we're in the competitive Denver real estate market. And in my back, so we rented for about a year. And in my mind, I'm like, I don't want to pay for somebody else's mortgage. And it ate away at me every month. Every month we went squared away, did bills. I saw my money, zero return back. And
did it like actually bug you when you wrote the check every month?
Yes.
Okay.
Yes. Because it's zero. Like it's I don't know. It was just a big pet peeve of mine. And I thought, like, this guy's doing what I should be doing right now. And this guy or girl, is doing what I should be doing. And it's killing me. And then I read the book. It was a couple years ago. So I don't remember the exacts, but Set for Light for Scott Transworth.
Oh, yeah. Yep. That's a great book.
Yes. That's where it really dove into your realistic financial foundation to get into real estate investing easy. Well, not easy, but achievable.
Yeah.
And then creating excellent wealth. And then I started diving into house hacking. And then that's when I went on Bigger Pockets, which everyone should go on Bigger Pockets. If you have any question out there, it's on there.
Yep.
And
it literally is.
a name came up that went by the name of, I think, Chris Lopez. And so I met up with him. I heard I read a few things. I heard he knows a little bit about house hacking, and Allison was not on board with house hacking. She was not on board.
Yeah.
Because
at first it was just you and I connected, and we
correct.
met. Yeah.
Correct. And so she wasn't on board, and I did my best over dinner, like, hey, check it out. Look at what we can do together. This would be
look
great.
how much money we could make.
Look at how much money. And I was putting the numbers down, and it always ended up in fail. It didn't work out. And I know when to give up. And so I'd give up. And then I don't remember when, but then I got her to go to one of your house hacking seminars. And after that, she was like, Ben, that's all, like, I'm all in.
She was probably like, why didn't you mention this before, right?
Right. Yeah. How come you never brought this
Have you heard of house hacking before?
Right.
Let's do it. And what she liked was, if you when she met Chris and everyone out there, like, there's when I think of a realtor, I think of a guy getting out in his Mercedes and that just got done with brunch or something or whatever it may be, but Chris is just a real person, just got done shoveling his neighbor's driveway in a flannel, just showing me house hacks or showing me properties, and you're a real person that it proved that, like, anyone can do it, and it's achievable and it can be done. It just takes work and a little bit of sacrifice.
So very well said. So I want to pivot from here, because I'm gonna give that plug back into the interview we just did a few weeks ago with you and Allison for all the details on your full journey, the numbers on there, how you guys work as a team, because I think that's a great thing where you have your strengths, she has her strengths, and you guys play to it.
Her strengths and my strengths.
Yeah. And you guys but you're a great partnership, and you do very well on Airbnb. But let's go back, since the whole point of this book with the guide to Denver real estate investing strategies, it's for getting people to kind of actually sit down and put their goals on paper, so that way it's committed, and they can also network with other people. So hopefully I'm not putting a spot here, but can you summarize kind of what your next few years worth of plans are for real estate investing? Short-term, medium-term goals. Just kind of share with everyone what your plans are. Yes, and I'm glad that we're doing this now, because I believe my wife and I we do it twice a year. We do it in the middle of the year and at the end of the year. We look over our financials and see what type of financial position we're in to get another investment property. And so I would say everything with COVID kind of threw it off, but these are still similar. Our goal is between, I would say, starting 2021, we're in the financial position to get another one, but I would like to wait and be more on the conservative side to build up my savings for another house hack down the road, and turn our current one into a long-term rental. And we did talk about this last on our interview, and there's so many different options I have to turn my current property into a rental. I can do long-term on the top and long-term on the bottom, because I'm gonna
sorry, yeah.
So you got a 3-bedroom, 2-bathroom main ranch house.
Correct.
And then you got an attached garage.
Yep.
And if you go out the exterior of the garage out back, you have a separate entrance that goes up into a 1-bedroom, 1-bathroom unit above the garage. Correct. With a kitchenette in there, or full kitchen. It's a small kitchen.
This is kitchenette, 1-bedroom, 1-bath. Yeah. And that's that we
that you currently Airbnb.
Currently we're Airbnb, and now we're doing short-term 3-month furnished lease right now.
Great.
But we have so many options to where, if we want to continue down the short-term route, I could reach out to maybe an eager investor that was someone like me early on that really wanted to dip my toes into see what real estate investing and maybe property management was like, and work a deal with them where they could manage the Airbnb. Well, not manage the Airbnb, but see what it's like living with tenants, and we'd be kind of co-hosts.
Yeah.
To make it work. So then I'm still working. It's a win-win situation. They're getting a discounted rent, and I'm getting more income because I'm still Airbnb in it.
Right.
Or flip it around and have someone up top, and then maybe rent out. I could even rent out room by room. But there's a lot of different options, which I love, and
you're also playing by the rules though too, because you'll have the primary occupant of the house. Doesn't have to be the owner.
That's very important.
But the primary occupant of the house, so that could be your tenant in there running the Airbnb.
Yes.
And you guys do some type of profit share on there.
Yes.
That's fully appropriate, fully legal. I like that. It's very smart. We talk to a lot of people that are constantly trying to skirt the rules on Airbnb. It's like, please just follow the rules. Yes. The rules are there. Just follow the rules. So this is great. I mean,
you can always do it for so long and kind of skim and avoid everything, but everything's great until your plan hits a fan.
Everything's great until it's not great.
Yeah, that's exactly what I was about to say.
Yeah.
And so it's just not worth it. Doing your due diligence, knowing what your city code, the laws are, and luckily, our VAT is very, very easy, very progressive, and so, but still trying to follow by the rules, and so that's our plan is just another investment property in 2021, and then increasing.
Let me. I got a question for you here. Going back to that option you talked about, hey, you might rent it out long term, or you might put a tenant in there and do some Airbnb profit share. Have you? Because I know you said you're getting about netting right around like $2,000 a month for the one unit upstairs. Pre-COVID anyway.
Pre-COVID. Airbnb is about $2,000 a month.
If you did the main house, do you know what you'd be netting again pre-COVID numbers? Because I imagine if you put a tenant in that smaller unit and Airbnb the bigger unit, the house, you'd probably make a lot more cash flow.
So if we rent out room by room, or if we rent out room by room, like if we did room by room Airbnb, or we did the whole entire thing Airbnb. I'm asking
let's do the whole thing.
Yeah, the main house.
Airbnb. So I would guess we could get it maybe $175 a night, and let's say I always like being about 10% below what our competition is. Okay. And we would get about, I'd say, 85% occupancy rate.
Wow.
So everybody that's wondering, this is so good. Yeah. 85% occupancy is a great number, but how does he arrive at that? By being 10% less than the competition. That's the key that I got out of that whole sentence right there. If I'm running the Airbnb, which I'm not, but now if I decide to run one, I got the tip. That's the secret sauce. Be 10% less than your competition. Anyways, yes. Go ahead. That's great.
So, but it's a good thing is knowing your competition, knowing what's out there. So if it's Wednesday, we're coming up on a weekend and we're empty. If I look at all the similar places and they're all full, I know that someone eventually is going to be looking to get a private 1-bedroom, 1-bath to stay in that weekend, so I can increase my rates a little bit higher, because I know eventually someone's going to be looking. But if I notice all 4 or 5 of my competition is still empty, then I got to go a little bit below because I have more competition. And being full, once I get past that point of return, I can't make that money. And I distinctly remember when we spoke a few months ago, you're like, it's similar to airlines.
Yep.
Once that plane takes off, they can't
get that seat back.
They can't take that seat back. So even if it doesn't matter, as long as it's full and you're getting the reviews and you're maintaining superhost status.
Yeah, like the power status. Or
and it's just like the more traffic you get, the more you come up. Like, so let's say you Google search best dinner restaurants, and people pay a little bit more. There's an algorithm to show up higher and higher. It's the same with Airbnb. Is if you're viewed a lot, you start to go up there, and then you start to get superhost status. It works your way up, and you get more attention. And you can also look, which Allison does an excellent job at, every day, looking at our current views to see where they're at, or if people are looking to stay, people are looking to travel, or if just people are daydreaming during COVID, stuck at home.
Right. It's that old adage, right? The rich get richer. If you're at the top, it's easier to keep moving up, right?
Yeah.
If you're at the bottom, you've got to really take extra strides to move up.
Yeah.
So that's cool. I like that.
So have you guys decided, are you leaning towards, doing a tenant and doing having a tenant do short-term rentals, or are you just thinking more like, hey, just traditional long-term?
It depends where we're at in our family, with our family that time. And it all depends. And I don't have an answer for that. Just kind of see it.
That's totally fair.
That's
That's what I was
fair.
expecting.
Yeah.
I'd like to talk to Allison about that first.
That's a smart husband.
We have her on the line here. It's like one of those surprise radio shows. Well, as a matter of fact, here she is. I think that's
Phone
great.
a friend.
Right.
Phone a wife.
Now, how many properties do you have right now? You have your property in Nebraska, and then you have the property here in Arvada. Do you have any others?
So it's funny that right now I'm in the process of, I did have a duplex, so I went 50-50 on a partner in Nebraska, but we just sold that and we're 1031 exchanging it into a property that we are closing. Is tomorrow the 1st?
2 days.
2 days.
2 days, yeah.
2 days. We're closing in 2 days.
Oh, what are you buying?
Yeah,
Like, what's the trade up?
It's I wouldn't say it's a trade up. It's less headache because we're both growing and we want less headache. It's just a larger, more single family in a nicer part of town. With it's not downtown next to.
Are you're keeping it in Nebraska?
It's in Nebraska.
Okay.
So our duplex was in downtown Nebraska, right next to like the Creighton Hospital, the University of Nebraska Medical Center, and it was in an older area, but there's a lot of work and a lot of maintenance and a lot of headache.
An older home
Yes.
comes with all those things.
Yes, it absolutely does. And so we wanted to go to more of the western part of Omaha is the newer area with the newer schools, and now we're going for more professional like professional young couples or families even that aren't going to move every year. We're going to get more long-term tenants.
Great.
Newer house that was built in the 90s, under 5,000 renovation. Just it fits our financial goals right now and even getting a property manager and having it operate on its own. The systems in place.
Can I ask, like, what's the gross rents your duplex
did bring in
about
$1950.
About $1950. What's the single family home going to bring in?
Hopefully $1850 to $1850.
Okay, so your income will be about the same, but it's more a trip aid. You're just going for a better asset, less headache, and better location.
Mm-hmm. Yep, yeah. And a little bit more expensive, but we're 1031, so we're able to roll our profits into the down payment.
Yep.
You know what I love, and I preach this all the time, is know your criteria for what you want. And you hit the nail on the head. You wanted a newer, nicer property with less headache, similar cash flow, and less than $5,000 in renovation. I'll bet it was not a difficult search. It might have taken some time, but you didn't have to search. You didn't have to kiss a bunch of frogs to find the prince, right? Like this was, hey, we know exactly what we're looking for. We see this on the MLS. It's totally busted. I'm not even going to bother clicking on it. You were able to quickly screen out and find the 5, 10, 15, 20 properties that you wanted to look at by having that clear criteria. I love that. That's something that we talk about all the time in every class. It's one of the things that I love seeing about somebody that's got a handful of properties under their belt. That is an indicator that you're going to continue to be successful.
And he rattled off those bullet points, 3 or 4 bullet points, just boom, 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 which is great.
That's perfect.
We seriously appreciate it.
I bet your realtor in Omaha loves you.
Yes.
Yes. He's probably listening.
Yes.
So, that's great.
And the one thing is that I wanted to touch on that topic is inventory.
Mm-hmm.
You see, kind of going back to the house hacking, everyone is always like, so I can't find any multi-units. But like, if you look at the inventory of multi-units out there, whether it's in Omaha is crazy going up, just like Denver is. There isn't much inventory, but if you look at 3-bedroom, 2-bath, 4-bedroom, 2-bath, the inventory, you have a lot more to choose from.
Right.
So it's similar dynamics to Denver.
Then multi-units, because you have everybody and their brother wanting to buy a duplex, triplex, quad.
We have a tendency to put our blinders on, right? I only want this type of property. Meanwhile, there's a smoking deal like right here outside your view, but you don't see it because you're so focused on it has to be a multi-unit, and there's a condo or there's a single family with an ADU that is way better than this multi-unit that's inside your view, right? I think we get our blinders on. That's such a great point.
And everyone's personal position is different, and what their financial goals in real estate investing, because real estate investing, in my opinion, is like, okay, let's talk about construction. There's plumbing, electrical, concrete, structural. It's so vague. It's so just a term is construction, but real estate investing, you get wholesaling, flipping, house hacking, long-term buy and holds. it's so there's any way you can do it and whatever fits your position. And
yeah, I love it. So you're going to buy one more property in 2021.
Correct.
What's the long term? Tell us about your strategy. You want to own 5 properties, 10 properties, 100 proproperties?
That's an unknown number right now.
Okay, that's a fair answer.
I want to keep going, but it just, I'm not a single guy in college. I just want to I will looking to have a family soon, and it can be challenging. So, and I'm very fortunate that I was able to convince my wife to be on board with house hacking. So we're doing one more. I would like to do 2 or 3 more, but it's whatever fits our goals and some working together. Because if I can find a property with a nice large master bedroom, master bath, a nice place that we can still house hack and still meet our financial criteria, then it's a win-win for both people.
So I love this. I'm gonna have a question for both of you guys. So you have 3 properties right now. Your current house, the house in Nebraska, plus this other one you're closing on. So you're gonna have a total of 3.
Correct.
Okay. And then you want to buy one more. And
Correct.
So let's assume you buy one more and you never buy another property. So let's pause there for a second.
I'd be just fine with that too.
Chris, if your grandparents, when they retired, if they would have had one property paid off, free and clear, generating $1,000 a month in cash flow, would that have made an impact on their life?
I think it would have.
I think so too.
Yeah.
So Ben, if you buy one more and you stop and you do nothing but just make payments on these 4 properties for the next 30 years, and at the end of 30 years, you have these 4 properties paid off, free and clear. Now, they're probably going to be generating a lot more than $1,000.
Absolutely.
But for argument's sake, let's just say it's $1,000 a month. These 4 properties are now going to generate $4,000 a month. Do you think that's going to make a positive impact on your life?
Yes.
I think so
Absolutely.
too.
100%.
And it doesn't have to be 1,000,000 properties, 100 properties, 4, right? Which is what I love, that you're like, hey, you know what? I might buy 1, I might buy 2 or 3 more, but you know that those are going to make a positive impact on your life, the life of your spouse, the life of your children. It's going to give a positive impact financially, long-term, without a ton of risk. I think this is a great strategy. I love it.
Thank you. And I mean, right now in my mind, I think I've won because we're doing what my goal is, and I have a house in Denver in a competitive market and a mortgage that's less than $500 a month. I mean,
That's great.
people, it's not my rent doesn't cover my mortgage 100%, but how many people can say that they pay $500 a month for a 4-bedroom, 3-bath house?
I rented in college 20 years ago a 1-bedroom that I shared with 2 other guys. I didn't share the bedroom, but it was a 3-bedroom house, and my rent for my 1-bedroom was $300 a month. All right, that was 20 years ago. And I haven't seen the inside of your home, but I can assure you it's nicer than my college apartment that I shared with my buddies. And so for you to be able to do that for $500 a month, I think that's just outstanding. I love it.
Yeah. It's a very conservative approach, I believe, is I don't want to outbite that I can chew by just buying investment properties, 20% down, slowly do it and not expose myself to who knows,
So I love this. This is great. So I want to ask one more question as we're wrapping up here. And Chris, if you have another question, you can cut me off. But Ben, what is the number one piece of advice? If I'm a new person, don't own any properties, thinking about buying my first investment property, my first house hack, my first whatever real estate investment, one piece of advice that you would give to a new person?
Just one?
Besides using Chris and Joe for the real estate and for the loan. So the second piece of advice you would give.
Mine would be set goals and set manageable, measurable goals, and don't give up. So once you get that bug, I'm doing this. I love this. You don't do that today. Tomorrow, that bug gets cut in half. Then you don't. Then the next day, that half gets cut in half. And the longer you put it off, the least likely you're going to do it. So you listen to a podcast. You like, oh, this guy did it, and he got his wife on board. I'll shoot him an email 2 weeks from now. Don't do it now. You know what I
Love
mean?
that.
I'm not saying don't reach out to me now, but
Right.
whatever
Take
whatever you want to take action, and you're going to run into problems. It's not easy, but what I've learned is you learn through your problems. You're going to run into things. Things aren't going to go smooth, but that's part of, if it was easy, everyone would do it. It's just, you got to learn from your mistakes and move forward and just enjoy it. Enjoy it.
That is great advice, man. Set goals and take action. It's something, you listen to a podcast, you listen to something and it inspires you. Don't put it off that, I'll do this when I'm not busy. Guess what? You're always going to be busy. It's never convenient to buy real estate. It's like having a baby and taking a vacation and being sick. It's never convenient. You just have to do it. Buying real estate, buying your first property, your first investment, there's never going to be the perfect time just to do it.
So I want to actually, that's a great tip there. And I'm curious if you can remember this, but I'm sure when you came out here and you had a plan on doing something, hey, I will do this, this, and this. And you took action, and what happens to me is I got my plan and I have reality, and they often start at the same point. But when you start going out a few weeks, my plan and reality start diverging. Yeah. I'm kind of curious if you saw a big divergence between your plan and reality.
Yes.
Okay.
We closed on our house, and I didn't even know what I knew conservatively. I can live in this mother-in-law suite and rent out all 3 rooms, or I can Airbnb it. And so I didn't even know what my plan was for this house. I had multiple ideas that would fit our financial goals, but until then, when we closed on, then we started looking into diving into numbers, looking into Airbnb, looking into AirDNA, which I highly recommend.
Yeah.
Excellent goal. So don't reinvent the wheel. Someone's already doing the work for you.
Yeah.
It changes, because when we closed on our place, I still was trying to figure out what worked best for us, and kind of going off on a tangent, just like my strategies. But I lost my train of thought. I completely lost my train of thought.
You have a plan, right? And the best laid plan goes awry within the first 5 minutes. But if you don't have a plan, you're really going to be in trouble.
Yeah.
Right. So I think that is so critical. It was Eisenhower, right? He said things rarely go according to plan, but failing to plan is planning to fail. Right. You have to make a plan.
I have no idea who made that quote. Who said that quote?
That's Joe Massey, circa 2020.
But
that's original.
It sounds right.
I want to do one more quote on that. And Mike Tyson, everyone has a plan until they get punched in the face.
That's right. Now that one I do know. That's one of my favorites. I think it's great, man. You guys are doing awesome. Your investing strategy, I read through the book. I love it. I think it's just fantastic. I'm excited to see what you and Allison do. Excited to see where you keep going. And like you said, man, you could buy one more property. You're not going to be set for life tomorrow, but that is going to make a huge impact years, decades down the road for you, your wife, your children. I love it, man. I think you're on an awesome track.
Yeah, and I agree. I think so many people forget, hey, we call people buy property now, buy property. If you plan over 20 years, like, great, an extra $5,000 a month of retirement. It's a lot of money when it comes time to retire.
Yeah.
Like, it's a lot of money that's just passive cash flow coming in that a property manager is doing it.
Yeah. It's not a get rich quick, but over time it makes it work. Yeah. It works out.
Yeah. Cool. Awesome.
Yep. Ben, well, I appreciate you coming down, recording this with us. And while I have you live, are you going to write a chapter for 2021 book as well?
Yes. Alice and I will write a chapter.
Ooh, all right. Great. All right. So you announced me in 2021.
Yes.
Ben, thank you. Joe, thank you.
Of course. Thanks for having me.
And again, if you guys want to get more details on Ben's house hack, listen to the episode. We'll make a note of it in the show notes, or just look for it on the podcast feed. It's it'll say Arvada house hack, Airbnb, something like that in the title. If you got questions, reach out to Ben. He's a wealth of knowledge. He's happy to network and chat. He was actually talking earlier before we record, doing some like house hacking masterminds.
Yes.
So if you guys out there are interested in connecting, I would definitely put Ben on the list to go out there and connect with, because he's a networker, he's got some knowledge, and he's happy to share it.
Thank you, Chris. Thank you, Joe.
Thanks for coming, Ben. It's great
to see you, man.